Hello traders, in today's video we're going to be talking about correlations and how to take advantage of the Bitcoin correlation to altcoins. Additionally, my options course is going to be linked in the description below, so if you want to learn how to trade options, you can click that link. Without further ado, hi traders, I'm super excited for this video today. I'm going to try to keep it under just 5 minutes. We'll see if we can do that. Probably not, but what I'm going to give you guys today is just another tool that you can use in your arsenal when you're deciding to buy or sell when you're scalping. This is going to be a tool that you probably don't want to use as your main indicator. It's probably something you want to use as more of an execution indicator. An execution indicator is where if you're already bullish, you're just looking for where do I buy, how do I buy, and this is going to show you how to do that. The first thing you're going to want to do is calculate the correlation between Bitcoin and the asset that you're trying to trade. So here I just calculated the correlation between XRP perp. Imagine we're trading XRP and Bitcoin, and I just used a 60, which means the last 1 hour correlation, last 60 minutes basically. And the current correlation is 0.91, which is pretty strong, meaning that they're pretty positively correlated. So they're probably going to move in tandem. Now, for the fun part, you're looking at a 5-second chart of XRP and of BTC, so we can actually see pinpoint when moves do occur, and you're going to see this kind of lag effect that I like to call. Essentially, Bitcoin will make moves and altcoins will follow it, but there is a slight period of time where you can take advantage of this before others do, before the markets even catch up. So what I mean by that is, look here, Bitcoin rises not a significant amount, but about 0.14, and that's going to probably make altcoins rise similarly. And what did XRP do? When Bitcoin made this second pretty strong move, XRP was just about here, and it did continue to move up around another 0.5%. This probably occurred because Bitcoin rose. Remember, these are 5-second candlesticks. Bitcoin rose, and then XRP just slowly caught up, and then you can see how that happened here. Another example of that is here. Bitcoin was rising, and then just seconds later, XRP rises. This is, again, just a lag effect. So how do we take advantage of this in the very, very, very short term? How do we do this? Well, let's imagine that we're here, and I just saw this occur, or just this occur. Right at this point right here, I can see that, XRP hasn't really moved with the same amount of velocity as Bitcoin has in the very short term. Now, of course, I need to say one thing. Just because Bitcoin does this does absolutely not mean that XRP will follow suit. It just means that there's likely going to be a higher probability that it will happen in the micro term, in the very, very micro term. And this is a strategy, again, that you probably don't want to use as a main indicator. This is your secondary indicator. So let's say I'm already bullish in XRP, and I'm just like, all right, where do I buy? I want to scalp. I want to just trade for, a few minutes and then get out. But I think that XRP is going to go up in the next few minutes. What do I do? Well, I'd probably want to set, I probably want to do a slight market buy like right here. And the reason I say that is because, again, of the lag effect that XRP is probably going to, we already know what does happen here, but XRP is probably going to rise. And if you had bought here at the top of that candle on XRP, you would have enjoyed about a, what is that, 2.76% increase in 1 minute. So after fees and slippage, you probably would have made around 2 to 2.5% in about a minute. And you could have done that by already being bullish, of course, and then also just tracking Bitcoin. Let's go to random point in time. I'm not looking. Okay. So I hope you guys didn't look either. So let's go look at what's going on here, and let's go look at the lag effect. Let's say here we're bullish or bearish, so we're just willing to do this, whatever. Let's wait for a big move on Bitcoin, because that's the kind of thing we want to do this with a very large move. So it looks like Bitcoin's dropping here. Is this large enough? This was a 6 basics minus 0.06%. Moderately strong, but I want to see some volatility. Okay, so here, still not like a bunch of volatility in the 5-second chart. Okay, so here is something for sure. So Bitcoin is showing itself to be a bit more bullish, and it doesn't look like XRP is caught up yet. And look at that. Just when I said that, it was at 0.993 and it went up to 0.994. Reason for that is probably because it hasn't followed Bitcoin yet. So naturally, it's going to rise a little bit. Yeah, and XRP continued to rise here. Now what we can see, so how we could have played this would have been you know, pretty simple. For entry, you know, if XRP is kind of staying flat or there's a large offer wall, then buying that offer wall could potentially be good if you think that Bitcoin has risen with enough velocity and Bitcoin's likely to, you know, if you think it's going to continue rising, then you could buy there. And then you probably want to sell when you think that they're back in tandem, where let's say that XRP and Bitcoin are just kind of moving the exact same way at that point, like maybe around here-ish where they're kind of doing the exact same thing. And that's kind of just trading the correlation and taking advantage of that in the micro term. But again, I want to, the whole randomness thing was fun, but I want to zoom in on a really volatile point because that's the most important thing to show you guys. Let's look at the sell-off. It's not that strong of a Bitcoin sell-off. It was like 0.25%, which doesn't seem like a lot, but it will have an effect on altcoins. And if you don't use correlation and you trade or you scalp, I think you're making a mistake. I think that you absolutely should be looking at correlation. You absolutely should be looking at what Bitcoin's doing to make your decisions. And not doing so, I think, would be a little bit dangerous. So here's another example of it. It looks like Bitcoin fell a decent amount here, 5 basis points. Again, not that many. Yeah, this would have been just okay. It looks like XRP was mostly just following this, and there wasn't much of a lag effect where Bitcoin fell and then XRP fell after. Here was just kind of weird. This would have been a really weird thing. I mean, in all honesty, I would have probably bought somewhere around here in this flat range. And the reason I say that is, look, Bitcoin rises, XRP doesn't. So this is kind of like, if I'm already bullish, not just saying, oh, I'm just buying just because I want to, because it's likely to rise. No, if I'm already bullish on XRP, then buying it around 0.95 in this situation is probably not a bad idea. Bitcoin just rose a little bit, not like a ton, but it did rise about, what is it, $70, $80, $60, $70. Bitcoin rose a bit, and if we had bought at around there on XRP, I think that probably would have been good. And it looks like if you had bought there, your drawdown would be about 0.6%, but then price goes back up about 0.9. So that probably would have been fine. Not the like most beautiful trade of all time, but it probably would have worked. Ooh, this one's a little bit better, but it looks like XRP rose around the same time. Yeah, what you guys need to find is when it's lagging. And lag, I think a lot of times can occur from an offer wall or a bid wall. When there's a large wall that prevents price from going one way, that's where you can take advantage of it. Like this was, oh, this is beautiful. This is what I was trying to show you guys. Yep. So Bitcoin rises here about 5 basis points, 0.05% in 5 seconds, which is a little bit above average. It's nothing too crazy. But look at this. XRP rose 0.8% on that one candle. I can read that number right there. Plus 0.79% right there. So you can see that this, you know, was not insignificant. It rose about 1% overall. So how to take advantage of this? Basically, if you see something like this happening on a major altcoin, and you're already bullish on XRP, this is just a good setup to buy at around 0.98. Because had you bought around 0.98, you know, it would have been hard to sell 0.99, but maybe you would sold around like 0.986, 0.987. And yeah, so that brings us to here. So let's say that, oh wow, so we have some more volatility going right here. Yeah, so basically what we want to wait for is when the altcoin that you're looking at is either going against in the short term or going flat. That's kind of what we want to look for. And then that's when you want to take your trade. When they're doing the exact same thing with the exact same amount of velocity, there's not much reason for me to do anything here. But it's something like if Bitcoin was to just tank, and then there was just those very few seconds where XRP was just silent, XRP was just flat, that's where you could potentially sell. So that's going to probably do it for this video. I'm so tempted to make this video longer, but I think you guys get the message. Essentially, it's as simple as this. You can get correlation data absolutely for free. It's not that hard. You just use correlation coefficient, and you can get it to any coin that you want. You know, I could do this to Tron, I could do this to Litecoin, whatever. And then what you can do is try to get second-by-second granularity, which you can get through a TradingView Premium or through Trader. Both of those platforms work. And we want to use second-by-second granularity because that's really what's necessary in these markets. You need to be very, very fast. And if you want to use Ishibot instead, and if you think you can code this, then that could be a strategy you could do as well. But I will say that this is probably one of the better, if not among the best technical analysis strategies because you're not using past events to predict the future. You're using events that, well, in a way you kind of are, but you're basically using events that happened a few seconds before and then inferring that which will with what will happen to price of the altcoin. Like, Bitcoin just rose, XRP is likely to follow suit and rise. Bitcoin's rising right there, XRP is rising a little bit right there too. Even though the 1 second's kind of ugly because it's kind of like hard to see where everything is. But yeah, so that's gonna do it for this video. Basically, step 1, get the correlation coefficient going. Step 2, get second-by-second granularity. You can get that from a lot of different platforms. Step 3, make your analysis. Are you bullish on this coin? Are you bearish on this coin? How long do you want to be holding it? What's your target return? Are you looking for a 1% or 2% in a few minutes? Probably better to pick a volatile coin that is correlated to Bitcoin. And you want a coin that's correlated to Bitcoin and the correlation coefficient. Okay? And then the final step is just wait for an opportunity to strike. Wait for an opportunity where, let's say, Bitcoin skyrockets, the altcoin stays flat, and there are those few seconds that you can buy. And again, only do this if you already want to trade in that direction. Okay? So I hope this all makes sense with correlation trading and looking by second granularity on Bitcoin. Of course, this won't always work because there could just be, some crazy trade on Bitcoin and then price comes right back down, or some crazy sell on Bitcoin and price goes right back up. But this does give you, I think, a slightly better than 50-50 edge when trading altcoins, for sure. So without further ado, let's dive in. Y'all dive in.